Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, November 23rd, 2010. Well, folks, the markets are getting hammered again today. Yesterday, we were hammered as well early in the day. Then the Federal Reserve came to the rescue using POMO, and again, the markets recovered to close flat on the day. Will that happen again? We will see again towards the end of the day. I think it's somewhat unlikely that the markets can get all the way back to the flat line, but I do think the highs of the day somewhere in this range are very, very possible, maybe as high as the 200 moving average. If we got through the 200 moving average, I would really have to tip my cap to the Federal Reserve today. Again, for a second straight day, it's always harder to do it multiple days in a row. Think about it as a running marathon of some sort. They ran their marathon yesterday, expended a lot of energy. Can they do it again today? It's a hard task 2 days in a row. So again, right now the Dow is down 141 points, NASDAQ is down 38, S&P 500 is down about 16, basically 1 1/3 to 1.5% drops across the board. Now there were some great calls in the intraday stock chat, great calls on the blog, Rant and Rave blog again. We're doing a couple calls a day on that Rant and Rave blog, so you really do want to pay attention to it. And if you want more calls, then again, you got to join the research center and the intraday stock chat, or one or the other, to get some good calls. Intraday stock chat, more intraday calls, research center, more swing trading on the swing trade side. All right, so again, market today, what happens? We get a gap down. Now, why was the market dropping today? Let's cover that first of all. The first key has to be, and you always should know this going forward if you watch these videos, is the dollar. The dollar must be getting a big bid if the markets are gapping lower. And that's exactly what happened today and is happening currently. Taking a look at the UUP, which is the dollar index, look at this ginormous gap higher today and continue move up. All right, notice how the markets have started to rally a little bit over the last hour or so. Look at what the dollar's done. The dollar has topped out and begun to pull back. So again, this whole move, the gap up today in the dollar, caused the gap down in the U.S. markets. Then the continued move up in the dollar caused the continued sell-off in the markets. And now the dollar has topped and is pulling back slightly. That's causing the rebound in the SPY. Very simple, guys. Believe it or not, it's just the opposite of the dollar chart. Here we use the UUP to show you. Again, that's the ETF for the dollar. Now, what was the cause of the rise in the dollar? I mean, what really caused it? Yesterday we had Ireland. That was the initial mess, the bailout of Ireland. Everyone started to realize that more bailouts were going to be needed for other countries, Portugal, Spain, Italy. I mean, the list goes on and on, frankly. In Europe, that's a negative. That dropped the euro, which increased the dollar. Today, what was the cause of it? Well, the today cause was North and South Korea exchanging, basically fighting amongst themselves. Apparently, the North Koreans struck an island in South Korea, bombarding it with artillery and so forth. And again, South Koreans fought back and so forth. So a little bit of skirmish going on there in North and South Korea. Now, that's a very worrisome situation. We all know that North Korea is now a nuclear power, and also it's a destabilization facet in Asia. All right, then you're going to have China taking sides. You're going to have Japan taking sides. I mean, it could really be a situation that could freak out the markets. And again, when the markets look at something and see a destabilization effect, they look for safety. Where do they go for safety? The dollar. Even though the dollar has been getting diluted basically over the last couple of years, as the Federal Reserve has been pumping trillions of dollars into the system, it still is the reserve currency of the world. So when fear kind of jumps up, people are going to rush to the dollar. The dollar, again, got some bidders today. It pushed itself up. And again, that was all off the North and South Korean issues. Obviously, the European issues are still slightly there, but not as much nearly as they were yesterday morning initially, when that's when you see this initial drop to the downside. And then again, the Fed saves it on POMO later in the day. Now, as we see today, it's very interesting to note you got a major gap down today below this blue trend line. Now, this blue trend line is an amazing trend line. This blue trend line stretches all the way back from last Tuesday to the lows of Wednesday, and it gave us the exact low of yesterday. And what I'm showing you right now is key trend line analysis that you must use. Any trader out there that does not use trend line analysis is a trader that's probably going to lose, in my opinion. You got to understand the trends. You got to understand the pattern, price, and time, including trend line analysis, connecting these lows. It would have given you that buying opportunity yesterday, which was the exact low of the day. You could have rode this market all the way back up. Well, today we had another key trend line noted here that actually gave us a low plus a bottoming tail. And on the blog today, I posted this bottoming tail as a buy alert, and again said there's a decent chance that you're going to see an up move, and that was right here at the closing point of the bottoming tail. Again, we had a price of approximately $118.20, we'll call it. It was right in that range. Well, guess where the spiders are now? They're at 118.60. All right, trading around the 118.60 level. That's a 40-cent gain on the SPY. In addition, I gave out this call on the blog as well, and I also gave it to the intraday stock chat. Watch for this level on the Chevron chart. Right in here, folks. All right, 81.15 to 81.20. Double bottom pivot low. Right there. Look at that perfect hit of it. And I gave this out to the chat room like hours in advance. Like literally the opening within the first 30, 40 minutes of the day. I had alerted everyone to put a buy entry between 81.15 and 81.20. Sure enough, look at that. Perfect. Since then, since the 81.15, 81.20, by the way, on the blog, it was the exact low of the day. You can see it's timestamped, so you know it's official. And again, from that point on, look at the move up on Chevron. This is just using trendline analysis, which is the key that we show our Research Center members. And again, by the way, folks, just so everyone's aware, webinar, the last webinar of 2010 on December 4th, Saturday. It's a 5-hour intensive course. But again, if you sign up for that, you get a free week of the chat room included. So even if you're not a member of In the Money Stocks, if you are, you get a free week as well. Doesn't really matter. But anyone who joins the last webinar of the year, which we will be giving projections out to 2011 and through 2011, you will also get that free week of the chat room for later in December or early January to be used. So again, very, very important to sign up. The room's gonna fill up fast because of that deal, so you do want to get on board very, very quickly. All right, now a couple other things. So Chevron, great call today. Made good money on that. Spider's great call. There were some other calls as well we talked about. I'm not going to get in depth with them. I want to get back to some of the SPY action here. And again, notice the gap down here below the blue trend line. This is what we call, and this is another proprietary technique. I'm not going to go into what it is because you have to join the Research Center for this. I'll talk about it in tonight's video. But it's a river theory. River theory, a gap down below major support, that creates a river theory. And again, you can see the results of that for those of you that know what a river theory is as we headed down all the way down and sold off even more so to the downside. Pretty impressive. Again, even so, take a look. Not only did you have a good river theory, but you retested the line and you created a little bit of a topping tail right there, which was signaling downside even more. Sure enough, downside did come. Nice bounce, more downside, bottoming tail. That's a long signal. Up you go. And again, it's just making money left and right, left and right. Continuing to increase that portfolio by its value and making profits for yourself. All right, right now, what do we have for the afternoon session? Well, you have to judge that you're in a situation right now where the volume is getting lighter. Remember, tomorrow is the last day before the Thanksgiving holiday, so volume will continue to get lighter. Tomorrow volume, unless we get another shoe to drop like the North Korea-South Korea issue, should be extremely light tomorrow. That does bode as a neutral upside. So right from here, folks, I'll tell you right now, from this current point, from 118.55 right now on the SPY, I'm in a neutral to positive stance going through tomorrow, assuming no future shoe drops. Meaning that if you get another default tomorrow, for instance, which I don't think will happen, but if it did happen in Europe, then obviously the markets would get a little freaked again, the dollar would go up. But assuming none of that happens, which I don't think it will, I think you have a neutral to positive market going forward for the next day or so into the holiday session. And then again, Black Friday is on Friday, biggest shopping day of the year. Most likely the markets will be neutral to positive on that day, unless, again, that proverbial shoe drops, then you could always have an issue. All right? Let me just scan through, see if there's anything else I want to point out here. Obviously, stocks are taking a pretty big hit today. Some of the larger stocks, like Chevron and Exxon, as I mentioned, Exxon getting hit, and as well as Chevron. Although with Chevron, as I called out, beautiful buying opportunity. I made good money on that stock today for sure. Apple's down $5. It was up about that yesterday, so that's giving back the gains. Amazon was up about 5, down about 3.25 today. So a lot of these stocks that had good days yesterday are giving up their gains today. Dollar again will be in the forefront of the focus. If they push the dollar down, if the Federal Reserve can use the POMO money to keep this market propped up, then we should see this market again stay in a neutral setting to positive. Again, just a reminder, join that Research Center. I'll go over the river theory and a lot of the other key proprietary techniques we give our subscribers that make them money day after day. Tonight in the Research Center video, you get everything included underneath the Research Center in that Research Center, $49.99 a month. Everything's included, again, underneath that Research Center. You can find it at inthemoneystocks.com. All right, folks, enjoy. We'll see you soon. Take care.